Right.
Have you ever heard her say all banks should band together against illegal arms?
No.
Or illegal drugs?
No.
Or human trafficking?
No.
No. But this nascent asset class, we must all join arms against.
What this did was play into people's heads that these guys are never going to let Bitcoin survive.
What I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world. I hate the word crypto.
If I was the government, I'd close it down.
See Bitcoin, and therefore not really useful as a store of value, and they're not backed by anything. They're more of an asset for speculation.
There's nothing here except raw speculation. No different than when I go to Las Vegas and put my money on black or red on a roulette wheel.
Bitcoin, it just seems like a scam.
Bitcoin is a bubble, okay? Bitcoin is a bubble. It's a shame. It could be a currency.
Cryptos are not currencies. Full stop.
I personally think that Bitcoin is worthless. I don't care about Bitcoin. I could give a shit, to tell you the truth.
I was skeptical in 2013.
Is it true that you're building out a cryptocurrency capability?
I was a proud skeptic.
Blockchain is real. It's a technology. We use it. It's going to move money. It's going to move data. It's efficient.
I will be the pro-innovation and pro-Bitcoin president that America needs.
In a way, I'm really pleased that attention is now focused on the role that cryptos can play.
There will be a competition of money, and Bitcoin is part of that competition.
If you have the superior asset, it's going up forever, Laura. Forever.
I am a huge advocate for Bitcoin. I treat it as an asset, no different than a AAA office tower in Boston.
It's just like gold, only it's virtual, it's digital. It's not a competitor for the dollar, it's really a competitor for gold.
I look at it as digital gold, as I said before.
They've played their card. Right. They've driven the market down. They say, don't go in, it's going to crash, it's going to be worse. They all start buying.
Yeah.
You're saying now is the time to get in.
Now is the time
because they're coming.
Yeah.
And once they come, people should go to jail, but it's not illegal. They were the ones who caused the problem.
Right.
Then they were talking everything down and saying, "I'm just taking the junk off the table."
Yeah.
That's not junk now.
It's not junk.
Wall Street is fraud, America is fraud, the world is fraud, banks are fraud, central banks are fraud. We live in an era of fraud. It's all based on fraud, and they get a percentage of the fraud. That's the business model.
Throughout history, the elite have been known to systematically manipulate financial mechanisms like money printing.
There is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system.
Inflation. Interest rates.
To suggest that there is any moral or ethical aspect to anything that's going on now is to be completely naive.
Recessions.
The people on Wall Street broke this country, and there has still been no basic accountability.
Debt accumulation.
We live in an era dominated by financial terrorists, jihadis of banking. They're here to kill you.
And whatnot. However, such times don't last forever. There is always an end to them.
So that I think that the internet is going to be one of the major forces for reducing the role of government. The one thing that's missing, but that will soon be developed, is a reliable e-cash.
That was until the 2008 recession.
These were the darkest days of the financial crisis. So that to me suggests a very clever mind that saw an opportunity, the perfect opportunity to introduce a new radical technology and a new radical approach to money and finance.
January the 3rd, 2009, an anonymous figure on the internet using the pseudonym
Satoshi Nakamoto
released
something called Bitcoin.
Bitcoin?
Bitcoin!
A revolutionary concept that promised to transform the global financial system.
So if somebody says, I'm going to create something and sort of replaces the national currency.
But again, you ask yourself, that what actual benefit does this Bitcoin brings?
Bitcoin is fundamentally different.
There is no Bitcoin company. There is no Bitcoin building. There's not even a Bitcoin server anywhere that you could shut down.
For the first time, a way for the two of us to exchange value online without a third-party intermediary.
Bitcoin became something that started to pose threats to the central banks and Wall Street institutions. challenging their traditional control over the financial system.
Central bankers have just reignited their war against Bitcoin.
Wall Street is ruining Bitcoin.
It's not a surprise. Why is this person against Bitcoin? Why is this banker against Bitcoin? Why is this bank against Bitcoin?
I'm sorry for shouting, but it just disgusts me what these people in government do. And they do it through central banking and through the control of the money supply, and Bitcoin takes that away from them.
Exactly when institutions were saying, oh, this is just a market for idiots, nobody should be buying this stuff. So they literally stole all this wealth that should have been in the hands of individuals.
Governments like to know where the money is, who has it, and what you're doing with it. And in case you haven't noticed. Okay? And governments like to control their currency, like to control their own economy.
How do you react when something threatens your position? Naturally, you try to resist it, right? But what happens when it grows far stronger than you imagined? Eventually, you're left with no option but to surrender. This is exactly what Bitcoin did to those who once held control.
And so at that point, central bankers started to realize that they were really under some threat. And the question became, if we can't beat them, do we join them?
For me and many others, it started with something called CBDC. October the 2nd, 2020, just before the Q4 bull run of 2020, the European Central Bank published a report. You might think it's a coincidence, right? But I don't. The report stated, this report examines the issuance of a central bank digital currency, aka CBDC.
You know my views on CBDCs, and you know that I have pushed that project. Fabio Panetta is working hard on that together with members in the entire Euro system. But in a way, I'm really pleased that attention is now focused on the role that cryptos can play and the role that central bank digital currency can have when they are implemented.
At first, I had a feeling that something wasn't quite right. But when I read the comments, it became clear that something was off, because this was the same Christine Lagarde who had previously stated.
We don't want innovation that would shake the system so much that we would lose the stability that is needed.
On the other hand, let's hear what the Federal Reserve has to say about this.
The Chinese last month unveiled the world's first digital currency from a major power. Currency that would not be printed but would exist only in cyberspace on your phone, for example. Is the Fed working on a digital dollar?
We are actually evaluating that. Most major countries are now looking at the possibility of having a digital currency and really asking the question, would it actually benefit the public that we serve? That's the question that we're asking. Benefit the public that we serve. That's the question that we're asking.
After receiving this response from the Federal Reserve, I went down the rabbit hole in search of the actual game that was being played, uncovering clues that hinted at a much larger scheme. One important thing to keep in mind is the misconception surrounding digital currencies. While the term digital currency sounds advanced and is often associated with cryptocurrencies, there's a crucial difference. CBDCs are not decentralized. You may wonder what that means. Unlike Bitcoin, which is decentralized, meaning that no one can control it, CBDCs are centralized, meaning it would grant authorities easy access to individuals' money, just like the current system, but with much greater efficiency. So, despite the digital shift, the reality is the same. No true financial freedom, whether it's in paper or digital form. Fiat money remains controlled by central authorities. But aside from central banks, let's explore what the largest commercial and investment banks have to do with cryptocurrencies.
What do you call it when people are deliberately pushing down the price of an asset publicly and then going out privately and buying it?
Yeah.
That's manipulation.
Yes, it is.
JP Morgan, the world's largest bank by market capitalization, is led by Jamie Dimon. In 2017, Jamie Dimon said that he would fire any of his traders who bought Bitcoin. This caused a FUD and Bitcoin dropped a quarter of its value. The same week, it was revealed that the largest buyers of Bitcoin through XBT note shares were JP Morgan and Morgan Stanley, effectively buying the dip. And when people came to know about this, JP Morgan said, well, we didn't buy it. It was clients buying third-party products and they were just using JP Morgan's pipes to buy it. Even if they deny this and keep on calling cryptocurrencies a fraud or a scam.
Bitcoin itself is a hyped up fraud. It's a pet rocket. I don't care about Bitcoin. I could give a shit, to tell you the truth.
Why is that? They have their own blockchain, their own coin, and even their own wallet. Features that are exclusive to cryptocurrencies only. And even if they deny everything, why is that JP Morgan is an authorized participant for BlackRock's spot Bitcoin ETF?
And it just came out today that BlackRock dropped their updated S1, and it names two APs, JP Morgan and James Street, two predatory traditional financial firms.
Goldman Sachs, a leading global investment bank with more than $3 trillion of assets under management, previously stated that most cryptocurrencies will crash to zero. And 3 months later, they not only launched a new trading desk, but also put $400 million to buy a cryptocurrency trading platform. And its CEO, David Solomon, says that their firm can consider Bitcoin and Ethereum if the US regulations shift accordingly. The UBS Swiss Bank, the fortress of fortunes, where the world's elite keep their wealth, guarded by trust and unmatched privacy. They now have their own digital cash and a blockchain-based payment system. Additionally, it holds 3,600 shares in BlackRock's iShares Bitcoin Trust. But it's not just the banks that are after it. There's another echelon of elites holding it, and I have the proof. And yes, I will reveal it.
I know personally, I know people that would have gotten in or stayed in if these people weren't saying what they're saying.
This conference that we're all at here in Miami, Crypto, Bitcoin 2022, for the first time on the first day, I looked out in the audience, it was all the giant institutional investors. They've never come to this conference, never. And I started asking, guys, what are you doing here? And they're saying, we sense the world's changing. We see the policy coming. We see these senators showing up here. We know they're going to make this thing investable. It's going to be huge. Showing up here, we know they're going to make this thing investable. It's going to be huge.
BlackRock, the world's largest asset manager, with more than $11 trillion in assets under management, was founded by Lawrence Douglas Fink, aka Larry Fink. Fink, who previously hated crypto,
I hate the word crypto,
and dismissed it as primarily a tool for money laundering.
When I think about most of these cryptocurrencies, it just identifies how much money laundering there is being done in the world.
He has now changed his stance and expresses a growing interest in Bitcoin.
I believe Bitcoin is legitimate.
Highlighted by companies moved to launch a Bitcoin ETF through iShares Bitcoin Trust on 20th November. That made about $2 billion in its very first day.
You know, when BlackRock got into it, it was a market shift. It was almost like a level of validation, where the market's like, wait a minute, who got into it? A critic? Somebody that wasn't for it? They're flipping? They're not buying? Yeah, you know, we were wrong about it and we're doing this, right?
BlackRock has acquired about 500,000 Bitcoins within a year that are worth approximately $53 billion, or about 2.5% of all the Bitcoins that will ever exist. However, could there also be a portion held in their private holdings too?
Are you a believer personally? Meaning, is the Fink family a Bitcoin buyer or a buyer of this new ETF?
Well, now I could do that. I cannot, you know, I don't want to compete with our clients, so I don't buy single assets. I'll buy mutual funds, I'll buy single ETFs. So I have an opportunity to do that now. But I'm a believer in it because I do believe it is an alternative source for wealth holding.
In the world of Bitcoin ETFs, aside from BlackRock, there are two other prominent entities too. Fidelity Investments. It is one of the largest asset managers in the world with approximately $6 trillion in assets under management and is led by its CEO, Abigail Johnson. It holds about 280,000 Bitcoins that are worth approximately $28 billion. They launched their Fidelity Wise Origin Bitcoin Fund, which made $3 billion in its very first month. It's important to note that over the past 30 years, 5,500 ETFs have been launched, but only 2 have achieved $3 billion in their first month: BlackRock's iShares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund. Grayscale, an American digital currency asset management company founded by Barry Silbert, is best known for its flagship product, the Grayscale Bitcoin Trust, similar to that of IBIT and FBTC. It holds about 250,000 Bitcoins in trusted assets that are worth about $24 billion. Ray Dalio, founder of Bridgewater Associates, who once called Bitcoin a bubble and shame.
We have these criteria for determining what a bubble is. In other words, we take these criteria. I won't get into them because it'll probably take too long. But these criteria, and we just define a bubble based on those criteria. Bitcoin is a bubble, okay? Bitcoin is a bubble. It's a shame. It could be a currency. It could work, I mean, conceptually.
Now, he prefers owning Bitcoin rather than bonds.
You might say, I'd rather have Bitcoin than the bond. Personally, I'd rather have Bitcoin than a bond.
And Ray Dalio stated this week that he wants to steer away from debt assets like bonds and debt and have some hard money like gold and Bitcoin. And it's worth mentioning the sharks from the Shark Tank. Mark Cuban, who said he would prefer eating a banana rather than Bitcoin because bananas are more useful, and Kevin O'Leary, that slammed Bitcoin as a giant nothing burger. Guess what? The tables have turned. Mark Cuban says he's buying Bitcoin and gold investors on the other side are dumb.
Like, would you buy gold as an investment?
I have gold.
Okay.
Everybody likes to.
You know what? If you have gold, you're dumb as fuck.
And Mr. Wonderful says he's buying the dip because he trusts crypto's long-term potential.
And that's the decision you have to make at a time like this when you're an investor. I mean, this is an opportunity to say to myself or anybody, look, if I believe in 3 years, 36 months that there'll be policy on Bitcoin, do I want to own it after policy comes and all the institutions start buying it? Or do I want to take a chance and live with some volatility now? But if you believe in Bitcoin, it's a buying opportunity, but you can't guarantee that you're catching the bottom.
Paul Tudor Jones, the American billionaire hedge fund manager who once said that Bitcoin has a real problem with the US because of lower inflation. Guess what? His Tudor investment group increased its Bitcoin holdings by 400% in 2024, reaching 160 million through BlackRock's iShares Bitcoin Trust. Remember Neel Kashkari, CEO of the Federal Reserve Bank of Minneapolis, who said,
"There's enough cash in the financial system and there is an infinite amount of cash at the Federal Reserve. We will do whatever we need to do to make sure that there's enough cash in the banking system."
Guess what? He now says that he'll have an open mind towards Bitcoin. George Soros, a billionaire investor, hedge fund manager, and of course, a philanthropist, who famously said that Bitcoin is a speculative asset and a bubble. Yet just 2 months after saying this, his $26 billion family office received approval to buy Bitcoin. Shortly after George Soros, the Rockefeller family also stepped into the cryptocurrency market. Reason: their $3 billion venture capital firm made its entry into the crypto space. And who could forget the Rothschild? A Rothschild-linked firm has invested in ETFs, including both Grayscale and iShares Bitcoin Trust. However, the exact numbers remain confidential. According to analysis, 7 out of the 10 largest trading firms are directly involved in trading cryptocurrencies, particularly Bitcoin and Ethereum, while the remaining firms are exploring the space and a few remain skeptical. And if we talk about the 5 largest crypto exchanges in the world, Coinbase leads with 1.1 million Bitcoins. Binance has about 680,000 Bitcoins, followed by Bitfinex with 350,000, Kraken with 180,000, and OKX with 130,000 Bitcoins. Microstrategy, founded by Michael J. Saylor, was primarily a business intelligence software company, but now it's more of a Bitcoin strategic reserve. It has made the 2 largest purchases in Bitcoin history, of 52,000 Bitcoins on 18th of November and another staggering of 55,000 on 26th November, and now sits at 420,000 Bitcoins, valued at around $42 billion. Additionally, Microstrategy stock has surged 7-fold, or by 600% as of 2024.
So what do you say to people who say, well, it's a Ponzi scheme, because every time Bitcoin goes up, you issue more equity and debt to buy more Bitcoin, it just keeps going and going and going?
Yeah, just like developers in Manhattan, every time Manhattan real estate goes up in value, they issue more debt to develop more real estate. That's why your buildings are so tall in New York City. It's been going on for 350 years. I would call it an economy.
If anyone still believes that crypto is solely used for illegal purposes,
I've always been deeply opposed to crypto, Bitcoin, etc. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance,
and can be fully regulated.
And there has to be regulations, and this has to be applied and agreed upon
or stopped.
Back then, it was about $100+ per Bitcoin. Today, it's 9,000. Is it still rat poison?
Well, probably rat poison squared.
Then why is the U.S. government one of the largest holders of Bitcoin?
Many Americans do not realize that the United States government is among the largest holders of Bitcoin. Does anyone know that? How about that? The federal government is almost 210,000 Bitcoin, or 1% of the total supply that will ever exist.
And why is Donald Trump, the U.S. president-elect, now calling himself a pro-Bitcoin president?
Ultimately, my promise to each and every one of you is this: I will be the pro-innovation and pro-Bitcoin president that America needs and our citizens deserve. And we will make America and Bitcoin bigger, better, stronger, richer, freer, and greater than ever before. Thank you all. Have a good time with your Bitcoin and your crypto and everything else that you're playing with. And we're going to make that one of the greatest industries on earth. Good luck, and God bless you all. Thank you. God bless you. Thank you.
And why is the U.S. Senator Cynthia Lummis now proposing a Bitcoin strategic reserve for the United States?
Let's talk about the Bitcoin Act of 2024, because the most important thing for a lot of people is establishing a strategic Bitcoin reserve. On the other hand, though, some people say, why would we need such a thing?
So why Bitcoin would make sense as part of our strategic reserves is that we recognize other long-term stores of value and put them in strategic reserve. We have a gold strategic reserve. We have an oil strategic reserve. I think it is fitting that Bitcoin, now that is really digital gold, be included among our reserve assets. So I'm proposing in the Bitcoin Act that we purchase roughly 200,000 Bitcoin a year just by converting money we already have into Bitcoin and hold them for 20 years. If we did that with, say, 5% of all the Bitcoin that will ever exist, which is roughly 1 million Bitcoin, we could cut our debt in half in 20 years. And in the meantime, we would have an asset that's growing in value while our own dollar is decreasing in value, and thereby we could shore up the U.S. dollar as the world's reserve currency. What that does is help us protect ourselves against inflation and protect the U.S. dollar on the world stage.
All these people are already wealthy. All these people care about their reputation. If Bitcoin is such a trashy asset, why are all these people getting involved?
Let's follow the white rabbit and evaluate the paradigm. It's 2009 and you had $1 US to invest in each, the US dollar itself, gold, and Bitcoin. Let's see how these choices compare over time. If you had the same US dollar as of 2009, you would be left with virtually 68 cents today because it has lost 32% of its purchasing power since then and about 98% in the last century.
If you had the original US dollar, it would be worth about 35 of today's dollars. So that our dollar has actually lost about 97% of its purchasing power.
If you had bought gold for $1 US, you would multiply your money by 3, about a 200% profit.
Gold broke down, as a reserve asset on the eve of World War I, when all these nations declared war. Every single one of them went off the gold standard. I've read like 3,000 years of economic history, and as far as I can see, it was never as good as anybody ever thought it was. It's always been defective.
And guess how much profit for Bitcoin? 1,000%, 1,000,000%, 100 million%. 1 billion % is the amount what one would have profited if they just put $1 freaking dollar.
That is what Satoshi created when Satoshi created Bitcoin.
Satoshi gave us something far greater than just Bitcoin. He gave us a vision.
All right, last question. Finish this sentence. Bitcoin will win, but...
Not everybody's going to win with it.